You got to have your head under a rock if you have not seen Bitcoin recently making new highs. And everywhere you look, the bar keeps being reset. News organizations, well, they're excited because they got something new to talk about. Analysts are excited because the highs are back and they can now look for predictions for the future. And money managers, well, they're the most excited of all because they now have a new product that they can push even to retirement accounts for folks looking to jump on the trends. But everyone's not joining the party. Today, I want to discuss the pros and cons of using RIOT blockchain as a substitute for owning Bitcoin. Hey folks, Tom Gentile here. Welcome to the room. As of recent, Bitcoin's moved from the 2022 lows around 15K and surpassed the 2021 highs, have recently pushed above the 70,000 level. Now, some holders, including myself, think we could see future gains upward of near 100,000 in the very near future. That's great for Bitcoin, Ethereum, Bitcoin ETFs, and even stocks like MicroStrategy, headed up by Michael Saylor. One look at this guy 2 years ago, and many laughed at him because they thought he was going to be bankrupt. Several $billion later, he seems like the one who's laughing. Now, check out this chart. While Bitcoin's doubled this last year, MicroStrategy has actually tripled from under $600 a share to over $1,750 during the same time frame. I'm sure Mike's thanking Bitcoin for the move as we speak. Obviously, MicroStrategy has done very well considering it's a leveraged asset, but if Bitcoin were to drop, MicroStrategy should drop higher or harder because of that leverage. So if Bitcoin is the tide that's lifting all boats, how come RIOT isn't joining the party? Let's take a deeper dive, and I'll tell you also why I don't like RIOT as a Bitcoin alternative. Now, RIOT, or RIOT Platforms as it's called, is a company that's changed course about 3 times in the past several years. Prior to today, RIOT was actually called Biopics. It's a company that was founded on veterinary products, even had a patent or two. But in 2017, it made a major pivot to become a blockchain and Bitcoin miner. One of the key milestones in RIOT was when they acquired a cryptocurrency mining operation in Oklahoma City. That was the first big move into the space. Now, according to financial data, the company's not small by any means, has a market cap of $3 billion, trades under the symbol RIOT, and has decent trading volume. So why is it moving in the opposite direction of Bitcoin? You see, it's simple. RIOT mines Bitcoin and puts it on the market regularly to generate revenue needed for expenses. They lost 28 cents a share last quarter. Now, typically when you see something like that happen, the stock makes a big move in that one day. But RIOT's been dropping in share price over the last month, while Bitcoin's made some of the best moves we've seen in a long time. What's going on? Well, if you're mining and selling, you're not taking advantage of the current up moves in BTC. Now, some might argue this is their strategy, and if BTC were to fall, that'd be a great hedge. I think there's something deeper going on here, and it has to do with the upcoming halving that's scheduled for sometime next month. Now, if you were to Google what halving means, this is something you'd come up with here. What is halving? Well, basically what halving is we could read this. It's a change in Bitcoin's underlying blockchain technology designed to reduce the rate at which new Bitcoins are created. Basically, in a nutshell, every 4 years, the rewards miners are getting cut in half, all while digital mining gets harder and harder. I remember when I started mining Bitcoin over 10 years ago. Now, I mined after the first halving, so I didn't get the 50 coin rewards. When I started mining, they were only 25 coins. They'd actually cut from 50 to 25. That's what halving is called. It's when the rewards get cut in half. While I didn't see the first halving, I saw the other ones. Since then, I've seen 2 other halvings happen. And as you can see here, this is where the first halving occurred in November 28, 2012. The second was July 9th, 2016. The third happened in May of 2020. And the fourth halving is scheduled to occur in April of 2024. You see where I'm going with this? RIOT blockchain is about to take a 50% earnings cut. And when this happens, there's nothing they can really do about it. Bitcoins are going to continue to get harder to mine. And when a block is found, it will only allow you to get 3.125 in rewards to the miner. That's not a solid business plan in my mind. And according to stock price, many have already caught on. Take a look at this chart of RIOT blockchain. While Bitcoin's moved to new all-time highs, RIOT's dropped about 40% in the last month from $18 a share to $11.50 recently. Guys, I think the jig is up on RIOT blockchain. So if you believe Bitcoin is destined to go higher and you want to take advantage of the move, then investing in the physical asset is best. Or why don't you try one of those new spot ETFs such as IBIT? Because in my mind, that would be a close second. Hope you enjoyed the video. Comments, share them at the bottom. I'll see you soon. Bye, everyone.